Good evening, good afternoon, or good morning. I don't know in which time you are going to see this video. So today's video, I'm going to talk about pound sterling versus Australian dollar, GBPAUD. We're going to talk about first point, it's going to be the structure. We're going to see structure starting by monthly time frame, and we're going to deep down until 4 hour time frame. So, our second point, we're going to talk about support and resist. I mean, area of interest such as support and resistance or supply and demand. And the third point, it's gonna be patterns. So, starting from the first about structure, we're going to identify if we are in bullish trend, bearish, or sideways consolidations. We're going to start on monthly. And monthly, we can see clearly that the market is moving, it's making higher highs and higher lows, showing that there is bullish sentiments or there is buying control. So, to make this clear, how do we identify that the market is going bullish or bearish? We're going to change to line chart. This is candlestick chart. We can see the green candlestick means that it's a bullish one, and the red one it means that it's bearish, means that it's a big fight between buyers and sellers. And let's go deep down. So we're going to change this to line charts. If we take a look at line chart, we can see clearly that the market is making higher highs and higher lows, showing that there is a buying control. We're going to use horizontal ray so that we can see, so that we can mark our higher highs and higher lows, and we're gonna identify if there is a strong change from bullish to bearish. Okay, first of all, we're going to see that GBPUD is clearly on bullish sentiment using monthly time frame, because if we put our horizontal ray here, and we can see that the market broke up, making a new higher high, and then after breaking up, came down, makes a new lower low, and we expect to see the market continue going up. So we can see clearly that this is bullish sentiments. If we change this to weekly is still is a bearish, but looks like changing of structure. Because if we go back down, start from here, from this point, 7th June, the market moves up, making a new high, a new higher high. After reaching this area, 1.96 point, the market move it down until this point, making a new higher low, and the market broke up. So after breaking up, made a new higher high, and made a new lower low over this point. So now, after this, after we market this higher highs and higher low, the market break down. After breaking down, showing us signals that maybe the structure is changing to bearish. But our confirmation of changing of structure means that the market must continue going down, making lower lows and lower highs, so that we can identify clearly that this is a bearish sentiment. But from now, it is still bullish because the market broke this our line horizontal ray, showing that this is a new higher high, and we're expecting to see between this area 1.96 and 1.93 to the market makes a new lower low so that we, I mean, a new higher low so that we can continue going up. So means that if we mark this, we can see that monthly, that's monthly, bullish, and weekly is bullish too. Okay, bullish. So we're gonna go to daily time frame so that we can see what's happening around here. On daily time frame, we're gonna start from this bottom point here, 3 of October. If the market, when the market was here, after that, made a new high, okay, made a new high, and after making this high, came down, made a new higher low. After this higher low broke up, making a new higher high, and then came down, made a new higher low. The last higher low that we have here is this one, and the last higher high is this one. So if the market breaks the previous higher high, making a new higher high, we're clearly understanding that the market is still going bullish. But from now, it's still bullish, but in between this area, the market can come down, test the previous structure point, which is this one, and can continue going up. So we're going to see what's going to happen here. But from now, even daily, it's bullish. And we have here 3 time frame in sync. We have monthly bullish, weekly bullish, and 4 hour time frame bullish. So I mean, and daily bullish. So remember what I said before is that the market must be, all time frame must be in sync, or at least 3 time frames must be in sync to make us make decision. Okay, daily is bullish, and if we go down to the 4 hour time frame, okay, 4 hour time frame, I'm gonna change the chart to candlestick patterns. Okay, we're gonna change the candlestick pattern so that we can see what's happening here. On 4 hour time frame, this is looking like is a changing of structure. It seems like this is a bearish because the market made a new higher high, lower low. I mean higher high, higher low. This is okay. Failed to break the previous high to continue, and broke the low and made a new lower low. You can see that this is lower high. Sorry, this is lower high. So we can, on 4 hour time frame, if we change this to line chart, we can see clearly that this is seems like it's a bearish. The market is making a new lower lows and lower highs. But if we look in higher time frames, we can see that there is a strong bullish sentiment in this market. So if the market is in this, so if the market is in this stage, if we change this to candlestick pattern, means that to confirm the changing of structure, the market must make, for example, we are now in bearish sentiment, making lower lows, lower highs, lower lows, lower highs. So the market must break at least 2 lower highs to make a new higher low. So it's gonna see the same. We're going to look for the same structure on the 4 hour time frame. Okay, on the 4 hour time frame, we're expecting to see the market breaking up, making a new higher high, and we're going to expect if where is the market gonna make a lower low so that we can go bullish, because because our main rule is that all time frame must be in sync. Means that 4 hour time frame must be in sync so that we can move to the upside. Now, the market is not the market for 4 hour. It is bearish, so we're going to expect to see a new high. Means that must break the previous lows. Let me draw this for easy understanding. Okay, this is a previous higher low, and the market, when broke the previous higher low, made a new lower low. And after making this lower low, our lower high is gonna be this point right here, and the market is inside this range. To confirm the bearish sentiment, should breaking the previous lower low and made a new lower low, I'm gonna expect to wait a new lower high to continue go bearish. But we know that there is bullish sentiment. All we're gonna expect here is to see the market breaking the previous lower high, which is this one. We're going to market do something like this, breaking the previous lower high and retracing. Probably we're going to use some confluence tools such as Fibonacci or moving average. We're going to wait to see the market retesting one of these sides inside this range, and we're going to look for buying positions from now. After we identify that daily is bullish, monthly bullish, weekly bullish, means that 4 hours bearish, we're going to expect to see 4 hour changing to bullish so that we can make a new decision. Our second point is gonna be a structure. I mean, it's gonna be area of interest and support and resistance, or supply and demand. Okay, we're going to draw lines, not lines but zones, where we expect to see some reaction. Okay, if we to draw lines, we're gonna I usually start from daily time frame. To draw these lines, we're going to see where there is more rejections when the market reach the zone. Okay, if we draw our horizontal line on this point, we can see that previously we had this point as a support, gap resistance, and support. Means that there is a strong possibility to the market come and react on this level and push to the upside. And we have this point somewhere around here. Okay, let me draw this. I can consider this as our resistance. This one. There is we had here a strong reaction to the downside. If we take a look in time before, on July, the market was in this area, and after reaching this area, there was a strong push to the downside, and the market, when reached again on September, there is a strong bearish sentiment, and we're going to use these zones that there is had more rejections to draw our zones. To draw the zones, we're going to choose our reference point to use our some kind of candlestick pattern so that we can draw our zone. I'm gonna use these two candlesticks. This one here, I'm gonna use this as my support, my resistance. Mm, and I'm gonna use this one as a current support. If we don't find reference points to use as to draw our zones, we can go deep to the next time frame below to continue drawing our zone. Okay, I'm gonna use this one. Why am I using this area as a currently resistance? Because we had more reactions here as a support, resistance, and resistance. There is strong possibility to the market come and reach this area and then push to the upside. So I'm gonna mark this one as support. I'm gonna use these two candlestick as a support area, and I'm gonna go deep down and 4 hour time frame to mark this area here, because we have here, I think that we can use this as our support and resistance. So as I said before, on the time frame that we're going to use to place a position, we're going to use daily levels, and we're going to use 4 hour time frames levels too, and the patterns to enter to the market. We're going to draw them in 4 hour time frames or 3 minutes 3 minute time frame. Okay, why am I staying on 4 hour time frame? Because we know that in higher time frames it is bullish, monthly bullish, weekly bullish, and 4 hour daily bullish and 4 hour bearish. We have here these zones. I do expect to see the market breaking the previous. This is the previous lower low. I mean lower high. This is the lower low. After breaking this lower low, it's gonna make a new lower high, and it's gonna consider this one a lower high. What do I expect? I'm expecting to see the market breaking the previous lower high and retrace, maybe to make a higher low. When it breaks, it's gonna make a new higher high. It can come and retrace on this level right here, or retrace on this previous structure low. It will depend by what's gonna happen to the market. So we have here this moving averages. This moving average, I use it as a dynamic support or dynamic resistance, and I expect to see the market breaking up this moving average, so that after coming back, retracing, after retracing, if retracing, if if it touches the moving average, we can consider this as a support, but in 4 hour time frame. So to enter to the markets, we're going to use daily or 3 minute time frame to place a position after a strong bullish candlestick. After strong engulfing candlestick. So, well, that's all about GA. All I do expect is to see breaking this area, this previous lower low, lower high, and make a new lower low, maybe to this point right here, or maybe to this one, so that I can place a trade to buy and continue with the major trends. So going back to a little quick recap, we saw that monthly is bullish, weekly is bullish, daily is bullish, so 4 hour is bearish. So we're going to work on 4 hours to see the changing of structure to bullish, so that we can enter to the market and make a new decision. That's all from today to GA, and thank you.